when you're deal structuring that deal in a desking tool and the down payment changes, or the trade-in changes, is it still in compliance? And can you ping it back and still get back to that lender with real-time integration and say, is this still fit at this rate, this terms of payment for this customer?
Aligning bureaus and those scorecards with what their lender, their primary lender more specifically, is utilizing, right? I'm eliminating those variables and I can get closer and closer. Penny perfect.
The store can reduce the friction, quotes become more accurate, we protect the profit, we improve the CSI, and we make the buying process feel a lot smoother for customers.
Welcome to the 700 Credit Podcast, the future of automotive finance, compliance, identity verification, and smarter dealership processes. Let's get into it.
Hey, what's going on, Automotive Nation? It is Jason Harris here, and thank you for joining me on another episode of the 700 Credit Podcast. Boy, do we got a good episode for you guys. Today, we are talking about one of the biggest friction points in retail automotive, and that is the gap between what customers are quoted early in the sales process and actually what comes back from the lender later in the deal. Guys, I know if you're out there watching, listening to this, you've all had this happen. I know I've had this happen, right? Hey, joining me today is Ken Hill, managing partner of 700 Credit, and Pete MacInnis, founder and CEO of eLend Solutions. Now, Ken and Pete have known each other just for a little while, right? I heard a rumor that they have been supporting each other for the last 20 years. So I know this is going to be a really fun conversation. Now, eLend has built a platform around connected retailing, connecting credit, identity verification, and finance desking solutions that help dealers bring more accurate financing information early into the buying process, which, guys, we all know, come on, we need that, right? So today, guys, we're going to be having a real conversation around what dealers are facing right now with inaccurate payment quotes, lender disconnect, fraud risk, and now better credit, and how we can create better credit identity and fintech workflows, how we can ultimately help and create a faster, cleaner, and more profitable sales process. Because, guys, at the end of the day, that's what it's all about, right? Let me bring up our guests. Guys, I have the one, the only, Ken Hill. Ken, what's going on? How are you doing?
Good. How are you?
And I have the so famous, at least that's what I've been told. No, I'm just kidding. I have been told the so famous Pete MacInnis. Pete, how are you today, sir?
Great. Thanks so much for having me on the show, Jason.
Guys, I am excited to get this going. Okay, so look, normally I love kicking off these podcasts with, kind of how you guys got into the industry, right? But Pete and Ken, you guys have known each other for a long time, and in a long time. So here's what I like to do is I like to kind of kick it off and just how in the world you guys met each other, and kind of what's happened over the last 20 some odd years. Now I'm trying to decide, should I start with Ken first, or
yeah, I got the history story.
All right, Ken, you tell me.
Pete's a little older than I am. It might be a little foggier, but
this is
over early 2000s, right? I was in my prior life in another organization. We were dealing in credit and automotive, and Pete came to us. He was rolling out an online credit app.
That's pretty early.
First that I was aware of or know of. Collecting a consumer's information and be able to tie in and automatically gather their consent to pull their credit. And and I've been working with them ever since.
Dude, Pete, that's pretty early. I mean, at that time, I still remember having arguments with dealers on why they even needed a website. So, like, Pete, tell me a little bit, when you met Ken, did he have more hair? No.
He's younger, but I've got more hair. And
So tell me about this. You're rich. I think one of the first people that were bringing a credit application online. Which company was that with, and just kind of what was the aha moment for you?
Well, actually, the history goes back. So I spent the first 20 years of my career in the banking business, the auto finance lending business, and I was a co-founder of an auto finance company, and then I was getting ready to move on And it was really about, really is interesting because it goes, the reason I left was I saw so many inefficiencies between dealers and lenders. So as an example, here we are, we're an auto finance lender. We're getting fax machine credit applications from dealers all over the country. So we had a huge room with fax machines all lined up on all the walls with signs above them, California, Texas, Wisconsin, New York. And each fax machine had its own state, right? And we had people pulling those applications off the machine, go running them on to 67 desks of people doing data entry. And then we had to get them into the system on that Monday morning, and we had to get decision back to the dealer within 2 hours, okay,
Sure.
as an example. So this was pre a dealer track, pre Route 1, right? So we're looking at that and saying, okay, here's the inefficiency. So this is a Monday morning, 2 hour turnaround, 15,000 credit applications, input, decisioning, manual decisions, everything within 2 hours. And of course, you've got people, all these workers coming in off of a weekend, either sick, calling in sick, hungover, whatever it might be. You got packed stacks of applications on somebody's desk. They don't feel good, so they end up in a trash can. Now a dealer goes, I sent you an app, I never got an answer. That's how inefficient it was back in the day. So that really planted the seeds for me on this. So I started thinking about it, and the dealer world didn't even have online credit application. So I started doing some research as I was getting ready to move on. I said, there's got to be a better way to connect consumers, dealers, and lenders in the auto finance side. And started exploring and talking to people, and ran across Ken, who was running a loan origination system for lenders. And we were just getting into dialogue conversations about, hey, we got to get to this, get rid of these fax machines. We got to be able to get credit applications and, data upfront from the customers, not just the dealers. And this was right around the same time that Dealer Track Route 1 were being created. But it was really having the dealer put the application into those systems, so the dealers would key those into Route 1 and Dealer Track back in the day from a manual credit app. And so Ken and I were having conversations around, well, how do we do this with the consumer side? How do we get consumers filling out an online digital credit app and, and moving that somehow into the dealer process, et cetera? So that was the origin where it really started, where Ken and I had these conversations before this was right around 2003 when I was starting my auto finance company, and Ken was just getting ready to transition, into in his world today, running the credit reselling entity. So that's where it started. And as to Ken's point, so we created this online credit app. It was tied to credit pulling real, hard pull credit reports for consumers and being able to pre-approve them and get that information to the dealer. So then a few years later, it's like, okay, we need to do. We kind of pioneered the pre-qual credit app with soft credit pull. Back in the day, it was, those mailers, you could do a pre-qual in a group. And then we moved it to a one-on-one with a customer. And that's when Ken and I started to engage with in 700 Credit, where we said, all right, we need to do a pre-qual soft credit pull to the customer individually, and support all credit repository, Equifax, Experian, and TransUnion, which 700 Credit did. So that's where we said, we're building this credit app piece. We need to tie it to credit. 700 Credit is the connectivity that we can get to pull all those credit reports forward. So that's really the origin of all this, how this all started, decades.
And here we are 20 plus years, almost 25 plus years later, and we're still having great conversations around credit. But hey, that's a perfect segue kind of into our first topic today, right? Like, as we wanted to kind of start off, with the issue that probably every dealer has experienced in some form, right? A customer sees a payment online, or they get a quote, a payment, maybe a payment early in the showroom, but when the credit app is submitted and the lender decision comes back, the actual approval does not match the original quote. I mean, that creates all kinds of problems. It slows down the deal. It creates tension with the consumer. It puts the salesperson and the manager in a tough and awkward spot, and ultimately just makes the dealership look like they moved to the goalpost, right? They just moved it, like, we moved it over here, right? When the real issue is that the original quote was not lender backed. So, Pete, here's my question for you, right? From your perspective, why is this payment quote disconnect such a big problem for dealers today?
Well, it's simplistically, it's because consumers care as much about payment terms as they do price today. With the affordability, you got a new vehicle. Basically, it's just under $50,000 average price. So affordability is the driving force. It's just not, hey, do I get a good deal? But can I afford this? What's my monthly budget? How much can I handle? So that's really the driving factor. Customers care about those payment terms. So the dealer body says, aha, customers care about payment terms. They want to know what their terms are before they come to the store. So you know what? We'll give them payment terms. And then if they want terms, we'll give them terms. We'll quote them something, and then we'll figure it out later when they get to the store. Then it'll be the moment of truth when they get to the dealership.
Well,
so it started with that. So they said, how do we do that? So it's like, oh, we're going to go to our website or digital retailing tool. We're going to quote payments. We're going to go out there. We're going to create this form, and we're going to say, hey, customer, estimate your own credit score. And then based upon your own credit score, whatever you think it is, then we'll quote you payments based upon that, based on some type of credit tier. So that's like the initial flaw in the ointment is it's assuming that the customer is going to self-pencil, self-create their own finance payment terms based on what they decide what their FICO score might be, credit tier. And whether that's accurate, whether it's connected to reality or not, that's the first phase. The second problem of that is totally disconnected to how lenders do loan decisions today.
Pete, one thing I wanted to ask you that got me thinking about again, right? It's always accurate payments has always been a driving force behind all these tools, and then their marketing messages, penny perfect, and nobody's really 100% got there except yourself. But the letter that was recently sent by the FTC to the top 100 dealerships, right? And payment, advertised pricing versus payment that happens in the finance office. Does your product address that? I mean, do you think, are you using that argument at all when you're talking to dealers today and helping sharpening their rates and the rates they're quoting these consumers?
That's a good point.
Yeah. So the issue there is, and when I looked at the FTC, the rulings and stuff they put out, they were very focused on the pricing. They address, terms. They didn't get into the specifics of how a dealer arrived at payment terms because it's really kind of not theirs; it's the lenders. So it's an issue. Obviously, if they're going to come down hard on misrepresentation of pricing adjustments, and then the finance terms are completely different than what's initially quoted, that's obviously going to come to light. But I don't think they put a big spotlight on it yet. I think it's coming. I think it's right around the corner. It's pretty obvious that it has to be resolved. But I think it goes back to what Jason said earlier. And with the dealers, they're kind of in the middle in the box and kind of being forced to be the bad guy because consumers have demand of what they want. They're trying to give the customer what they want, but they're really not able to today because the lenders aren't part of that sales negotiation part in the front end of the deal. They're after the fact. It's still this fragmented, disjointed process where it's sales first, finance second, and there's really two different processes. So they'll come up with this front one and say, we'll give them a quote in the sales process, get them committed. Then when we get them into finance, then it's the moment of truth. And then we'll tell them, okay, that's not going to happen. And then blame it on the lender because the lender, black box, did it and we don't know how they arrived at it. And that's just the reality of the situation. But the adverse impact is it's going to impact sales for the dealer, front end gross profit, aftermarket product sales and finance, loss of those revenues, CSI. It just goes on and on and on.
It just ruins
the negative ways that it impacts the dealers and their reputation as well.
Well, and Pete, that you said that, and Ken, thanks for bringing that up because I think for years as a dealer, I've relied on the FICO ranges, credit tiers, and kind of general payment assumptions to quote customers, right? Like that's just I ran and operated multiple stores. That's just what I did. But lending has become much more dynamic. I mean, lenders are not just looking at a simple score range anymore. They're using more advanced models, more data, more individualized pricing decisions. So, I mean, that means the old way of quoting payments, like what I'm used to, can create a pretty big gap. And Pete, you were bringing up those really well between what the dealership thinks the customer qualifies for and what the lender is actually willing to approve. To your right, to your point, Pete, it puts us in the middle of this. So, Ken, I got a question for you on this. Why are traditional FICO based tiers and outdated loan pricing models no longer enough for accurate payment quoting? Because I still see a lot of us out there using that model, to Pete's point.
A couple of things I can think off the top of my head. Pete will probably give you a better answer, but one is lenders are changing, right? Specials, right? Their rate sheets are constantly changing. Keeping up with those is right. There's companies that's just what they do. But the ranges and the variance in scores between not just the bureaus, right? The ranges. I was just talking to somebody the other day. Or the scorecards, the FICO scorecards within each bureau. My one FICO score was a 740. My other one was a 780 the other day. And it's like, that's crazy. So that self-reported is of the past. I think tools are moving away from it, especially when they're trying to get a payment quote and an accurate payment quote. They'll send a delimiter in the sand and say, listen, this is the best we can estimate. If you want to get further, you got to bring your real score. And so aligning bureaus and those scorecards with what their primary lender more specifically is utilizing, right? I'm eliminating those variables and I can get closer and closer to penny perfect. But I think, right, some of the things that Pete's tool highlights and focuses on, and you mentioned it earlier, are what are those other elements that a lender is using when determining the rate, right? The dealers are just typically, historically, to your point, they're just using those rate sheets.
And Pete, I do want to get into that because how does eLend help dealers get closer to real lender matched? I like that, real lender matched payment options earlier in the process.
All right, can we hold that thought? I want to talk about that, but I want to add a little more color to what Ken is saying. And he's used the term twice about penny perfect, right? So I'd like to explain the misnomer about penny perfect payments. So in the industry says, you've got a lot of ones going out there saying, so, hey, we have penny perfect payments. Well, they're saying that penny perfect to what? The reality is what true penny perfect payments means, what they're doing is saying to the jurisdictional tax license and registrations of that locality, right? So if you give us a price, a term, and an interest rate, will be penny perfect payments calculation-wise for the tax license and registration fees. To me, that's what penny perfect payments is. However, the representation in the marketplace is that it's penny perfect to the customer. When in reality, most digital retailing tools, most dealer websites, and what it's going to have, they're completely disconnected from actual loan decision, right? And then the second part is on these rate sheets. Somebody say the difference, the whole rate sheets are gone for most lenders. They'll have rate sheets, those guidance sheets for specials, but if you want to get into a standard deal or a used vehicle, good luck. They basically, for most lenders, are gone. Getting into the detail of that. So when they used to say, okay, hey, if you're a 720 credit score, you get tier 1. You can take one customer with a 720 credit score who is rock solid like Ken Hill. Or you could take somebody with a 720 credit score. All they have is one credit card with a high limit with a zero balance on it because they're a user on daddy's credit card and they don't even have a job. They're in school. They can't qualify for anything. They don't even have a job. Those people, so that was the flaw with the, going off of a FICO credit tier for pricing and generalizing that. So the lenders have moved so much deeper than that. It's so dynamic down to the individual customer level. They're going to look at not just credit attributes. They're going to look at stability factors. So they're going to start off with the vehicle. You got all different pricing models on the vehicle. You could have different pricing models and specials on a particular brand down to a specific trim level of a model could have a different interest rate than a different trim level of that same model for that manufacturer. Okay, for starters, or the different terms, or you can get into the vehicle. You can have adjustments because, all right, well, maybe this guy's at a tier 2, but the vehicle has got 80,000 miles, and in combination with things like loan to value on that, or payment to income, or debt to income ratios, all of those things can move basis points up 20 basis points here, down 10 here. So the algorithm of a lender says, hey, we're going to give them a 10. They're under 100% loan to value, so we're going to drop them 25 basis points. But their debt to income ratio is at 48%, so we're going to bump it up another 30 basis points. So now it's a plus 10, and on and on and on and on. And I'm saying each lender can have a different algorithm of things that matter to them. Are they a homeowner? Are they a renter? What's their stability factor? How long have they been on your job? Right? There's so many attributes, an infinite number of attributes that a lender could use within their black box and say, is it a current customer of ours? And do they have an existing auto loan for us? And how have they done that? And by the way, are they going to also do auto pay with us? And we're going to give them another credit for that. So there's so much sophistication in the machine learning aspect of what lenders are doing today on how they say, not only do we look at all those attributes, but when we use AI and machine learning to say, how is this profile of this individual customer performing against our portfolio of people that look just like them? And we will now make pricing adjustments based on how our portfolio is performing for customers who look like that. So that's how complex it's got. And that is all happening after the scene, away from the sales process up front.
And that,
did I say enough and fast enough for you? Yeah.
No. You drove the point home like really, really well. I mean, and this is, for everyone out there watching and listening right now, this is, you mentioned earlier, and I want to kind of loop back around to it, why it's so incredibly important to bring finance earlier into the sales process. I mean, look, historically, a lot of the finance, reality happened late in the deal, like you were saying, right? Sales worked the customer, desk the deal, maybe quoted a payment, and then the F&I or the lender decision would reveal what was actually fundable. But today, customers expects speed, they expect transparency, accuracy, and they want this done much earlier. So, Kenny, here's
from at home.
And
from at home.
Exactly, right. So here's my question for you. So why is this so important operationally for dealers? I know we've talked about this many times before. I just want to drive this home. Why it's so important for operationally for dealers to, especially when you think about speed, compliance, and customer trust, to bring this up earlier in the sales process?
Well, just me personally, right? I love a dealership. I love looking at cars that are on the floor, but I don't want to spend 2 or 3 hours on a weekday or a Saturday in the dealership, right? And the best way to do that is to knock out, the hurdles to getting a deal done before they come into the dealership. I try to have my price to the penny before I walk into that dealership, right? They've already accessed my credit. I've already signed a credit app. They've already submitted it to the lender. And if I, what I can't seem to do now is sign that lender paperwork remotely. But that's coming. I know there's companies working on it, and Reynolds, CDK being 2 of them. But you don't want to spend a lot of time. You want to get as much of that deal done inside the dealership. Why take the chances of letting the deal unwind in the finance office when you can get past the objections, right? Getting sales 101, get past what are the objections, get past the objections. So what's my number one objection? Price, right? When I don't want to hem and haw in the finance office, I want to know, you got this price. All right, I'm going to go over here and see what price this guy has, right? Everybody does it. That's the whole purpose of shopping online. So, but getting those hurdles and those objections out of the way before you go into the dealership Plus, makes for a better sales process.
When you think about I look at it as like three legs of the stool for the dealer. There's figuring out early on how much profit am I going to make on the vehicle? How much profit am I going to make on the trade-in? They pretty much got that down, estimated pretty well up front. And then what they do is they say, this is a big unknown factor on the finance piece. And maybe we'll make money on the back end, maybe we won't. We'll figure that out later. Let's take care of the other two first. Right? I think if you can get all three together, there's going to be different driving factors in negotiation with the customer. Some are going to get hung up on price. Some think their trade's worth more than it is. And if the dealer doesn't know how much profit he's got in the finance, he needs that lever to say, hey, I've got this much room here. I can make it up on the back end. I might come up to the customer's price on the trade-in, or I might drop the sales price in the front end because I can make it on the back end. If he doesn't know if he's going to be able to mark the deal up or not, or how much he's going to get, he's lost that lever, right? And let me give you some numbers behind this to not just say, hey, the payments are misquoted. Here's some real data. We did a study and we looked at thousands of credit applications submitted to hundreds of lenders. And we looked at those credit apps and we said, okay, of all these applications submitted with a monthly payment, a down payment, and a term, what percentage of the time did the lenders come back with an as-is approval, which means we're going to approve it at that down payment, at that monthly payment, and that term? It was only 1.6% of the time. So then we drilled in a little deeper. We said, okay, well, where is it off? And it turned out that the average new car approval came back on average $32 higher than the initial quote to the customer, and $36 per month higher on a used vehicle, with an average term being 70 months. So that adds up to material dollars over the term of the loan. So if you've got that big of a gap and you're looking at $30 plus average deal, well, how does that impact front-end growth? If the dealer says, you know what, I quoted, I need to stick to it, then he's going to have to negotiate downward on his price, or he's going to have to back off on the back end, or he's going to have to give somewhere. So it's by misquoting, it's not just friction with the consumer, but it's going to have adverse impact on his profitability. He's going to lose some deals. He's going to lose front-end growth. He's going to lose back-end growth. And it could cost the dealer up to $500,000. We backed into the numbers. It's like that over $500,000 per year in lost opportunity with the disconnect between initial quote and reality from the lenders. So that's the seriousness of the problem.
No, look, I think the value there is huge for dealers out there. And for everybody out there watching and listening right here, I think what Pete just laid out for you guys is incredibly important, which is a perfect segue kind of into our next topic today, which is, how does better fintech workflow improve, right, profit, CSI, and speed, which you've already kind of touched on. But I mean, look, when you set up back and look at all this together, the real opportunity is not just one tool or one feature. It's the workflow. It's the process, right? Dealers need credit, identity, lender decisions, desking, compliance, and the customer experience to work together instead of trying to operate in these silos, right? If that happens, and to your point, Pete, the store can reduce the friction. Quotes become more accurate. We protect the profit, we improve the CSI, and we make the buying process feel a lot smoother for customers. So here's my question, Ken. I'll start with you. Why is this type of integration between companies like 700 Credit and eLend so important for the future of retail automotive?
Yeah, well, it's not just system integrations, right? It's integrated workflow, right? And if I'm a dealer and I have to go 4, 5, 6 different systems to get a sale done, that's awful. And you don't want to add friction. So, right, credit, you mentioned it, identity verification, credit and compliance, right? Those can be friction points if they're not handled right, right? Somebody fails something or if the systems don't communicate. So having a workflow that accomplishes everything a dealer needs to accomplish in as few systems as possible is key to the experience, right, and the timing, how long it takes. Consumer, right, it's going to be much happier if I walk in, pick up at 5 minutes, pick up a set of keys, and I'm out the door.
Much happier customers.
He's going to come back.
Way have and Pete, so like I know you've seen this play out. So in your experience, right, when a dealer gets the workflow right, what is the impact on the customer experience and the dealer's profitability? I know you mentioned a little bit, but I want to dive a little deeper into it.
Yeah, so it impacts. I think like when we did this study, we followed it up with a dealer survey. We said, okay, this is our data. If we put that out there, people are going to call BS on it because it doesn't make people look good, So it's got to be wrong. So we said, well, why don't we let's put out a dealer survey on this, and 700 Credit joined us in putting that survey out to the dealers. And we asked the same questions. Like, for example, we said, hey, our data's telling us that the average new car initial quote is $32 higher than lender decisions. And does that match your experience? 86% of the dealers said yes, And then we started drilling into deeper questions. Okay, then does that impact, front end gross profit? Yes, And then it was sort of like 40% of the dealers said it impacted on average like $300, per gross profit on the front end of the deal. And then there was similar questions around the finance penetration. What if the initial payment quote was resolved before they get to finance? How would that impact, F&I sales? And I think a majority of the dealers said probably a 10 to 20% lift in selling F&I product. So there's material, financial, real-time, upfront profit metric, right? And those are the obvious. The non-obvious are the ones that are going to impact CSI, branding, referral model, referrals and stuff like that. Repeat customers, because of their experience. Was their experience good? Did the dealer do what they say what they do, and all of that comes into place. So there's other longer term, bigger picture impact to that. But I want to go back to the processes that Ken's referring to. When you talk about the process, I think this is one of the things where 700 Credit and eLend work well together. And it goes back to the origins when we first started, working together many, many years ago. And now you look at, 20 years later, we still are. And every time we talk, it's like, what next? What can we do? How can we go deeper? How can we create more efficiencies, better customer experiences, more efficiencies for the dealer, and drive home more value that way? What else can we do? How can we do this? So some of the things, we talked early on about with 700 Credit, we did all the credit stuff, the hard pull, then the pre-screen and the pre-qual, and now their stuff's integrated into our platform. And then they go, okay, now let's take their synthetic fraud products. Let's display those inside our dashboard. To Ken's point, less systems, less rekeying, less having to go places. So because we have these bilateral integrations, we can do all that on the credit side where dealer says, yes, we use 700 Credit. We said, well, we're going to pull the credit using 700 Credit. It's in their dashboard. It's in our dashboard, along with their fraud tools. And then you take to the next level. Then we work together on fraud solutions. They got great quick scan, mobile driver's license verification stuff. We have our ID Drive, which does full driver's license authentication, in store. These things work together, and through the integration, we can say, hey, you know what? They might have been on Ken's Quick app and 700 Credits on the website, fill it out. That can API into our dashboard. So when the customer comes into the dealership, scans their license, we go, aha, they've already filled out the credit up. They've already pulled credit, and it's already in our platform. And we know that when they come in for the test drive, when we scan the license in store, now the desk manager looks at the deal and he goes, oh, this guy wants to do a test drive. Oh, you know what? This guy can't buy a bicycle. No joyride for him today. Or really solid. I'm going to get up from my desk. I'm going to go shake their hand, and I'm going to go upsell them to a premium vehicle, right? So you start talking about efficiencies and workflow. That's going to matter to both the consumer and the dealer. Can we
Yeah.
So we just took a customer and said, when Ken talks about process workflow, it's like the first digital footprint when they step in the store. Do we know them? Have they been in here before? Did they do something online? We know a lot of times the dealer spends so much time in lead generation and finding out where are they shopping, how are they going, and getting them into their CRI, and then get them into the store. When you have so many consumers might have been shopping online, they got enough information to cover them up. They just walked into the dealership cold call, right? So you say digital footprint. We need to know, right? Do we know this person? Okay, well, you want to test drive? We have to scan your license. And now we're not just protecting the consumer and the dealer from identity fraud, but we're helping them, give them insights quicker, faster, more efficiently of how to engage with that customer and how to deliver on the promise of giving them a better, buying experience.
That's right. And that's what it comes down to at the day. It's all about delivering a great buying experience. Look, guys, I know we're getting towards the tail end of or we actually are at the end of our conversation. And I know I can easily jam with both of you guys for much longer, but this has been a great conversation because look, it really comes back to simple but important point, right? Dealers do not just need more digital tools. They need better connected workflows that help them quote accurately, verify identity earlier, reduce fraud risk, and more customers and move customers through the buying process with less friction, right? If I kind of sum up everything we've kind of talked about here, look, Ken, Pete, I appreciate both of you guys taking the time to jam with me today and sharing how 700 Credit and eLend are working together to help dealers solve these challenges. It seems like a very like PB&J kind of a scenario here. So, hey, for all the dealers out there listening right now, guys, look, this is your takeaway. All right. If your sales process, your credit process, lender decisions, and identity verification are not connected early enough, there's a good chance you are creating friction, you're losing time, and potentially leaving profit on the table. You guys definitely have to be taking a look at both these guys' solutions and consider, really what your current workflow is at your dealership. Guys, thank you so much for your time. This
Yeah,
is
I just want to thank Pete real quick, Jason, for coming on. When he talks about Ken and I meet, we talk about every time. I've heard those stories a lot of times, or those pitches a lot of times. But that's what has made Pete so successful is his passion. He has passion and drive, and he's very committed to a better process for dealerships. So thanks, Pete, for coming on. I think.
Well, thank you. One last comment. You asked me a question earlier, and I said, let me come back to that. I'll just throw that plug in there at the middle so the dealers aren't hanging. When we talk about bringing finance forward, we're talking about lender fundable contract terms at the front of the sales process. So how do we take all the front end credit, all the identification, and get into desking solutions and have interactive desking solutions that are actually talking to lender automated decision processes in real time. So when you're deal structuring that deal in a desking tool and the down payment changes, or the trade-in changes, is it still in compliance? And can you ping it back and still get back to that lender with real-time integration and say, is this still fit this rate, this terms of payment for this customer? And that's what needs to move forward in the process.
There's the passion. There it is. He's trying to say goodbye, and he's got one more thing he wants to get in there.
Just one more.
Well, Pete, we're probably definitely going to have to do this again because I didn't get any super juicy stories on Ken. So I'm sure you got some. But guys, no, seriously, though, thank you so much for your time. For everybody out there watching and listening right now, we appreciate you. The fact that you're watching this right now means that you are proactive, you care about the customer experience and how your team is interacting with those customers on a daily basis. Look, one of the biggest compliments you can give us as content creators is share the show. Look, I'm not going to ask you to uppercut the like button and smash the subscribe because you won't. But I will ask you, if you have a colleague or a manager that needs to see some portion of today's show, share it. It makes you a hero. Guys, thank you so much for taking the time to jam with me today. This has been a blast. For everybody out there watching and listening, thank you, guys.
Thank you very much.
Thanks, Jason.
Thanks for tuning in to the 700 Credit Podcast. Tighten your process, protect your deals. See you in the next episode.